So yeah, let's go ahead and get started on everything, guys. Welcome back to today's Monday morning mortgage update. It's not baseball season yet, but I think we have rally time coming, guys. Now, I think the bond market is going to really do some favors for us this week. I think we're going to see a bond rally here, so I'm expecting to get some good improvement on rates this week. And let's dive into why. So first off, we got January CPI expectations. We have inflation coming out. So the headline, the forecast right now is for 0.24 to 0.3, and that's the CPI for January. Now we're replacing a 0.31. That's the CPI from a year ago in January. So we're replacing it with a lesser number, most likely. So that means overall inflation averaged over 12 months will come down to 2.85 from the 2.9. That is a really good thing. That helps mortgage rates and it brings mortgage rates down. Now, the core, if you look at the core, forecast is 0.27 to 0.3. We're replacing a 0.39 number. So we're going to go from 3.13 to from 3.13 from 3.24, which is a nice, good drop. But I think we may see a surprise. Now, I've talked to you guys about this before. The shelter costs is the biggest part. It's 46% of the core inflation number. And last year in January, it was 0.63. We think it's going to come in the 0.2 range. If that happens, we could see a surprise and we could see CPI have a little bit better than what they're actually expecting, which could cause a nice little rally. So that's super exciting. I know it's not, as exciting as the Phoenix Open hole-in-ones on TV and in person, but hey, we do have that going on for us right now. But it is exciting to me, and it's exciting for your customers because that means cheaper mortgage rates and easier to qualify for the homes that they like. So gold, I want to talk to you a little bit about this because there are some talks about the Treasury repricing gold. So follow me for a second here. Back in 1973, they fixed the price of gold through the Treasury at $42 an ounce. Right now, it's like $2,900 an ounce. So if they reprice that fixed price to whatever they want, but rumors are the number that they want it to be would give the Treasury an extra $800 to $900 billion in liquidity. That's a big chunk. That's almost $1 trillion. What that will do is that would boost their liquidity and allow them to stop issuing as many treasuries, which is debt. So it'll help with our debt. Now, you might say, well, can they do that? Yes, there's been a lot of countries, they do this quite often. Mark to market is kind of what the term's used, but this would help us overall for the amount of debt that's being issued, which is the bond market, which should help bring the Treasury costs on the 10-year down. So that's really good news. We'll see what happens with this. So keep your eye open on what the Treasury is going to be doing with this. We have a big week coming up, but here's where we're at with current interest rates. This is the bond market. This is what's happening over the last couple of weeks. We saw a little bit of a dip down here. It was a bad week. So we've seen a rally in the mortgage bonds, and the 30-year 6% coupon is up 8 basis points today. But we started off pretty low, so we're coming up against a 100-day moving average and the 200-day moving average. If we can move above that, and I think we will, I think we're going to test this Fibonacci level by the end of the week. But we'll see we have a big week ahead of us. So a lot of economic factors hitting, but we should see some really good news as we go towards the end of the week. So here's where we are on average. Now, depending on your credit scores, you may have a higher rate or lower, but these are averages for a 30-year fixed right now. 30-year on a Fannie Mae or conventional, you're right around the 7%, 7.03. 15-year, you're about half better than that. Jumbo's a little higher in the 7.31 category. ARMs are slightly better. You may be able to get a little bit more of a, 0.2. You're not saving a ton. So you may be able to get a little bit better rate with an ARM. And then you're looking at VA as well. Pretty good there. So what's going on this week? We have a lot going on. If we can keep on this, there we go. So tomorrow we have Fed Chair Powell talking. We've got some Treasury auctions and then CPI on Wednesday. So that's going to be really, really interesting to see. And then can't talk today. Fed Chair Powell speaking again, and then we have some more Treasury auctions. So we have PPI month to month on Thursday, and we've got initial jobless claims on Thursday, and retail sales coming out on Friday. So we have a big week. So we're really going to see on Wednesday is the big, hopefully a good surprise for us. So as we move forward, hopefully the rates will come down, and inventory is not the best out there, and some of these homes need renovation. So I'm going to now jump right into renovation loans. But before I do that, does anyone have any questions with what's going on with interest rates? What the rumors are with potentially a mark-to-market with gold as far as repricing that? Any questions on that? All right, well, let's jump. You mentioned a class coming up. Christy, what was the class that you had mentioned that's coming up?
I mentioned quite a few classes coming up, but what I'll do is when I send out Sean's recording of this, I actually send everything that's happening in
Perfect.
February with that. So you're going to see that. So Jan, I noticed you said that. I will definitely reach out to you as soon as it's over and get you that link. Thanks.
Perfect. Excellent. All right, so renovation loans. We have a lot of buyers that are pre-approved that are looking at homes and they're just not finding what they want. So I want to urge you to open up the idea of some of your buyers on properties that may not fit. Maybe they have the bones, but they need just something extra. They need, a wall knockdown. They need complete update. Renovation loans may be the solution. Now, most people, when they buy a house, they kind of put their own little twist on what they like in the house anyway. This just gives them the financial wherewithal to do it. And they still can set it up so that there's very little out of pocket. In fact, you could do a 97%, so 3% down if they're a first-time home buyer on a renovation loan. So let's dive into this a little bit more in detail. This is a home that I found that needs some TLC. Like if you look at this, you're like, okay, this needs some updating. It's got really old, looks like, I don't even know what kind of countertops these are. It's got bars on the windows. It's got a carport. It's got old wallpaper that, hey, that's kind of coming back in some areas, but it needs some help. I mean, the front door, it's got some putting green grass in here. It needs some help, right? So what if we saw this property and the layout was perfect? It was in the part of the town that the buyers really, really wanted, but it needs 100 grand. It needs 100 grand into this. What do? Well, you could do a renovation loan, and there's conventional renovation loans, and there's FHA renovation loans. So there's home style renovation, which if you're a first-time home buyer, you can do as little as 3% down on this. And then there's the FHA 203K limited and the standard. So these programs, they all have their quirks. So basically what we do is we figure out what the costs to renovate would be. And then we add that into what the value would be at the end. And then we do a calculation to see how much we can finance it so that the buyers can come in with as little money out of pocket and then finance all of those upgrades and changes to the home and then get started on construction right away. So there's home style renovation, and there's the FHA 203K and the 203K standard. Now, I'm not going to go into all of the details here because it can get pretty complicated, but I want you to just open up your eyes to the potential, because you can do, as an example, with the home style, the conventional mortgage, you can do an ADU. You could do another, mother-in-law suite or a secondary residence in the backyard with the new ADU rules that are out there, and you can finance that with the purchase. You can do add-ons. You can do a lot of really high-cost things involved with this. Now, with the FHA 203K, the limited, you could do up to $35,000 of repairs, and you could go down to only a $5,000 repair. So if you need something like the roof to be renovated, or you need the exterior to be repainted and new fascia boards around the house, or all new carpet, and maybe there was an issue with mold and somebody came in there and they ripped the drywall out and we need to redo all the drywall, stuff like that. That's minor. A limited, that's very quick. Or there's a 203K where you need a lot more involved. You need new air conditioning units. You need a new roof. You need the driveway to be redone because their roots tore up a lot of stuff like that. You can do the full-blown 203K. Now, I want you to just open up your mind when you're working with buyers to say this could be an option. If your buyers are willing to go through the necessary requirements to do so, we can take advantage of these programs and get them into the location they want to be, and then renovate the loan afterwards and finance a majority of it. So really cool programs. I want you to just keep an eye on what you can do. And here's what the eligibility repairs include. With the Fannie Mae, which is the conventional loan, you can do the ADU. You can construction repairs of outdoor buildings. You can do final work on newly built homes. So when the home is at least 90% complete. So let's just say somebody's starting to renovate a home and they didn't finish. You can do that. You can finish those projects. It has to be permanently affixed to the real property though. So keep that in mind. Ineligible repairs on the home style with the conventional. You can't let the borrower can't complete borrower completed repairs. You can't just do it on your own. It has to be like an actual contractor that does it. You can't tear the whole house down and redo it. It can only last 6 months. You can't take a single family detached and convert it into a 2 to 4 unit. And then you can't take one home and move it to another location. Like that could be like an old historic home or a manufactured home. You can't do that. So that's some of the limitations on the conventional. FHA 203K, remember there's a limited, which is a small amount, and then there's the standard, which is the big amount. So structural alterations, you can absolutely do that. You can modernize and improve the property. Health and safety issues. So if you've got mold, if you've got issues like that, or lead-based paint peeling and all that kind of crazy stuff that can happen with FHA, you can add all of that into it. Roofs, gutters, fascia boards, energy conservation improvements. All of that can be included in the 203K. You can't do ADUs with the FHA product, only conventional. Pool repairs, you can't do major pool repairs with it either. And you can't do things that are going to take longer than 6 months. So again, numbers of units, you can't do that as well. And FHA does not allow you to do luxury or recreational improvements like putting in a built-in kitchen out in the backyard or a pickleball court or something like that. So there are some limitations, but I want you to just open your mind to the fact that we don't have the greatest inventory. It is getting better, but when inventory is low and there's a lot of properties out there that need some improvement, keep this as an option, and I'll walk this through with your buyers to see what their options are. But it can be a great way to get into a home so that you can take a home that looks like this on the left, turn it into that on the right. You could take a backyard that looks like this, make it modernized and more efficient in the back, and clean that up. And so lots and lots of options, guys. And I think it's a great way to really help your buyers open their minds to possibilities. And again, some people want turnkey, and I get that, but there could be some really good values, and you could get a really good price on these homes, knowing that there's a lot of TLC to put into it. So keep that in mind, guys. Super excited to have these products and to know that there is our possibility in this market. Don't forget, guys, FICOBoost.com. That is my program. I own it. If you have some customers that need some credit repair or credit boosting, I am here for them on that. So I'm going to go ahead and hold on 1 second here. Stop share on this if I can do that, and just jump into any questions that you may have regarding the programs that I've outlined or what's going on in the markets currently. All right, I don't think there's any questions. That's fantastic. So keep me in mind for anything and everything, guys. There's nothing we don't do, except for we don't do lot loans. Okay, but
On
we
that-
are. Yes,
I have a question.
sure.
How long do we need to write a contract for to go through the process of that? Like,
So
does
I
it
would
need to
say
be a 60, 90?
60 days should be sufficient for us to get a contractor out there with the FHA. If you're doing the standard FHA, we have to deal with an FHA consultant, a HUD counselor on that, or consultant on that. But 60 days should be fine to do what we need to do for a typical 203K. A good question.
Hey, Sean,
Yes.
do the contractors have to be on the approved list? Or does the consumer have to?
You know, I couldn't quite hear you. And
I
of
was
course, I've
asking-
got a blower outside. Let me turn up my volume.
It's me, I'm in a coffee shop. Can you hear, is it better?
Yeah, go ahead.
I was asking, does the contractor have to be on your approved list, or does the consumer have the ability to use their own license on the contract?
It has to be a licensed contractor that we have to do. They can't be there. They can't do it themselves. But good question.
No, I'm asking, is it on your approved list contractors, or do they have their ability to find their own licensed bonded contractor themselves?
Oh, I see. Yes, they have to be a approved contractor in order to do it through the Fannie Mae list. So, and you can actually submit to have them approved. So we could talk more about that if there's somebody outside of that. Now, it can be a little bit more expensive on the cost to do that because sometimes those Fannie Mae approved contractors are a little bit more expensive. So we can look at all of that as part of the numbers here, because sometimes doing it now and then using their own funds could be cheaper and a lot more flexibility. So we'd have to look into those. So good question, Napoleon. And my gosh, I hate leaf blowers. They're right outside my window, and if you can't hear them, then thank you, but and you're lucky. But they are blasting outside my window right now. So I apologize if I can't hear you. I get flipper calls all day. Does this work for flipper? No, it does not. This is for a permanent residence. We do long-term mortgages, anything less than 6 months, I do not offer. We do have a flipper loan that is available. That is like a hard money deal. And remember, lenders get, oh gosh, these blowers are driving me crazy. Lenders don't make money on loans unless they stay on the books for longer than 6 months. So, I don't know if you guys can hear that, but I apologize. But if you have any questions, go ahead and put them in on the chat. But I may just end this because I can't hear myself think right now. All right, guys. Well, if you have anything, shoot me an email. I'm going to go see if we can reschedule these leaf blowers so they're not Monday right when our call hits. But you guys have a great day, and we will be in touch.
Thanks, Sean.
All right, we'll see you guys.